Well, I think the essence of responsible investment is the idea that investors need to take responsibility for the impact of the companies they invest in. So in a sense, this should be really natural for venture because venture capital is fully involved in the creation of companies from the outset. So the idea that there is a responsibility to understand how that company's products and services are going to contribute to societal well-being and also to protect the planet, I think is something which really fits well with the whole venture ethos. Yeah, in terms of reconciling financial performance with sustainability, I think it's a question of time horizons quite often. So over the long term, there's plenty of evidence that shows that sustainable companies outperform. But that is taking a long-term time horizon. The other way of looking at it, though, is more about resilience. So I think that's a slightly different concept that says that companies that are built around truly sustainable operations with high environmental, social and governance qualities tend to be more resilient to sort of the uncertainty and the variability in economic circumstances that we face, more so now than perhaps ever before. So there's something there about the variability of returns as well as the absolute return. One of the biggest challenges with sustainable investment is around data. So if we're going to measure companies on performance on sustainability factors as well as financial, then clearly we need good data to be able to measure that performance. And data on carbon is getting increasingly better, but data on social factors can be quite hard to measure. But overall, I think it's pretty important to not let lack of high quality data get in the way of action. Because at the end of the day, I think we can often tell what the better course of action is for environment and for the society, even without the best quality data. When it comes to responsible investment, I think it's interesting to distinguish impact from just sort of good quality ESG management. I mean, ESG management should be default for any investor and any company now. It's really critical, it's considered a hygiene factor really. But a lot of companies, and again, particularly talking about the venture space, the companies are founded on an idea of a product or service that's going to make life better for people at its root. And so we should be naturally thinking about impact. What is the social and environmental and economic positive impact of this company, and how do we maximize that?